In this video, I'll answer the question, is Unity Software stock a buy? I'll use my simplified 6-step framework for analysis, so let's get right into it. The first step in my framework considers customer value, and Unity is the world's leading platform for real-time content creation. Several well-known game titles use Unity's software engine, including Call of Duty Mobile. And Call of Duty is one of the most popular games in the world. The fact that Call of Duty chose to use Unity software says a lot about the value that they perceive from Unity software. Revenue has grown from 381 million to 1.1 billion from 2018 to 2021 as game developers have increased their usage of the platform. Another step I like to look at in looking at customer value is the Net Promoter Score, which is a survey that judges customer loyalty. And Unity scored -8, and if we look at the scale down here of what's a good Net Promoter Score, -8 here is down in the red section where it says needs improvement. So not a great sign there for Unity software that it's scoring -8 in Net Promoter Score. The next step in my framework looks at unit economics, and Unity Software is a software as a service company which has a potential for excellent profit margins once economies and scale are reached, but until then, Unity Software is generating massive losses that are growing. Operating losses from 130 million in 2018 to 532 million in 2021. So losses are growing. That's not the direction you want to go in when you're investing in a company. The next step in my framework looks at the total addressable market. Especially with fast growing businesses, you want to see what the ceiling is. How far up can it go? And according to Unity Software Management, it estimates it has a market opportunity of $29 billion. The next step in my framework looks at competition, and for Unity software, its main competitor is Unreal Engine, and then it competes with proprietary engines that gaming studios use. For instance, Nintendo uses its own proprietary software, its own gaming engine for developing games. Although it does use Unity for some of its games, it doesn't create all of its games on the proprietary engine, but some of them it does. But the good news here is that the competition is not so much based on price here. It's mostly based on capabilities. Which software is more intuitive to use, which game developers prefer which software, and how they work and the type of games that they want to create. So it's more of a preference and needs based rather than price based, which is good news for investors because that won't drive down profit margins as one company lowers its price and the other one lowers its price to match it. And so that's good news for investors. And the next step in my framework, arguably the more important step, looks at valuation. And I had to use the price to sales ratio for Unity because it does not produce consistent profits or cash flow. And so I chose to use the price to sales ratio. And according to this metric, Unity stock has never been cheaper at a price to sales of 7. If we look back all the way back before January of 2021, admittedly it's a brief history as a publicly traded company, but still it's the cheapest that it's been, and it's significantly down from the over 45 it was trading for, but I would argue it should never have been trading at a price that expensive to begin with. Still, I could say that it's relatively inexpensive looking at its own brief history as a public company. The final step in my framework looks at its risks, and the primary risk I note here is that it had some data problems stemming from Apple's iOS changes, decreasing its ability to generate ad-supported revenue. Some of its services are provided for free, and then Unity makes money by delivering advertisements. And so that system relied on gathering data in order to be able to sell the advertising, and the fact that the data was tarnished decreased its ability to sell that advertising, and so decreased its reputation among game developers to be able to offer that service. And so that's a risk going forward. Now they did make an acquisition to try and close this leak in the company, to close this weakness, and it remains to be seen if that acquisition that was completed somewhere around July of this year is going to solve the problem. So stay tuned for that. And then the second risk I note here is the massive and growing losses on the bottom line. It's not running the business sustainably. You can't continue a business while it's generating losses at such a magnitude. Something has to give. All right, now that I've looked at each step in the framework, let me assign a grade. Customer value, I gave Unity Software a B+. It has some notable wins among popular gaming titles that have chosen to go with its software. Solid revenue growth, however, a very low net promoter score, and so only a B+ there. Could have been better. Unit economics, I gave them a C+. It's hard to get a better grade when you're generating such heavy losses in operating income. Total addressable market, they also get a low score here, C+, because the market opportunity is relatively small at less than 30 billion. Competition, they get a B+ here because, like I noted, it's based on capabilities and not on price, and so that's favorable for investors. Risks, they get a B- because of the massive losses on the bottom line and the data problem and the difficulty in selling ad and generating ad-based revenue. And then finally, valuation, they got a B because they're trading at the cheapest price to sales ratio that it's ever been, but that period is short, only a year and a half to 2 years, so you can't glean much information from that because it's been such a short time. Okay, so before I move on to the next slide and answer the question if the stock is a buy, this is where I commend you all to subscribe to my channel, because I will be providing updates on this stock as it reports earnings, as it reports major announcements, and so that might change the recommendation, and if that does, you will be one of the first to find out, so you can make a more informed decision. So please subscribe. All right, that being said, let's move on to the next slide, answering the question, is Unity Software stock a buy? Unity Software stock is not a buy. The massive losses on the bottom line combined with the executional difficulties with the ad problems, the ad supported revenue problems, and the fact that it has, I had to use the price to sales ratio, no consistent free cash flow or operating income, sways me to say this stock is not a buy just yet. It would be prudent to wait to see if that recently made acquisition does indeed solve the ad revenue problem, and see how the valuation evolves going forward the next 3 to 6 months. You may have an opportunity to enter into this stock at a better value. So stay tuned. I'll keep you posted if there's any updates on the stock that changes my recommendation. But for now, the stock is not a buy. All right, so thank you for watching, and I'll see you next time in the next installment of Is This Stock a Buy? I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.